What's going on, guys? It's Stas here. Welcome back to another video. As you guys read in the title of today's video, I just wanted to go over a couple of stocks and ETFs that I'm watching for this upcoming week to end off July in 2018. And for those of you guys that are new to my channel, my name is Stas, and I make videos dealing with swing trading, day trading, long-term investing, and my personal philosophies and strategies when it comes down to investing and trading in the stock market. So for those of you guys that are interested in learning more about that and following along with me and my journey in the stock market, feel free to drop a like, leave a comment, and subscribe, and let's get started with the topic of this video. So right off the bat, guys, the number one ETF I'm watching for this upcoming week is ticker symbol DRN, and this one's a Direction REIT, which means in Real Estate Investment Trust Bull ETF, meaning whenever the index it trades based upon, which is RMZ, goes up in price, DRN is going up in price as well. And before I dive into this, DRN, its inverse is DRV. And for those of you guys that don't know how inverse ETFs work, pretty much they're very simple. Whenever one is going up in price, the other one is going down in price. So whenever we see DRN shooting up in price here, DRV is going down in price. And both of these ETFs, they trade based upon RMZ, which is the MSCI US Real Estate Investment Trust Index. And what we can see here, guys, is that this index has been bullish over the past couple of months, and that's obviously translated over to, DRN being bullish as well, because they pretty much follow the same exact chart. And what we notice if we look back over to this real estate investment trust index is that it's been on an uptrending pattern. Like I said, it's been, riding the EMA line. It's been trading above the SMA indicators that we look at, right? The simple moving averages. And what we notice here, guys, is that it topped off at about $1,168, and we saw a nice healthy correction in this particular index right back onto this 180-day SMA line. And what we do notice over this 90-day 2-hour chart is that this SMA line has acted as a support level in the past. We see it bounced right here on this SMA line. We saw a nice little healthy pullback here. It didn't exactly touch on the SMA line, but it held above the SMA line, which is a good example and a good indicator that this one's continuing the uptrend pattern that it's on, right? We saw another healthy pullback here. It touched the 50-day SMA indicator at this particular price point, shot back up, right? Now we saw another nice correction back onto this 180-day SMA line like I was talking about earlier. And why I find this, why I find DRN very attractive, which again goes up in price as RMZ is going up in price, is because it's been holding nicely above this 180-day SMA line, and it's been acting as a support level in the past, like I said before. And we do see some nice, uptrend momentum from when it bounced on this 180-day SMA line. And this can be illustrated a little bit better when we look closer to RMZ. We see that, okay, it pulled back nicely here. And from this bottom out point at about 1132, RMZ has been able to start pushing up. It had a green day here. Actually, no, this isn't exactly a green day. It started out red, dropped down a little bit, but from this bottom out point, right, it started to shoot up. The next day had a big green day from about 1136 up to about 1150. It got rejected by the SMA line here. Nice little healthy pullback again. And what we noticed is that, this RMZ index consolidated pretty much all day at this exact price point at about 1140. And what we noticed after market hours is that it stayed right about at 1140, pretty much for that whole entire day. And we could look at that based off the 1-day, 1-minute chart here. Actually, let's look at the 5-day, 5-minute chart. We see that, okay, nice little healthy pullback here from the huge green day we had 2 days ago. Nice little pullback here, and it pretty much chilled here for the rest of the day. Right at about 1140, shot back up, and has pretty much been chilling right around 1140 for this whole day. And how this translates over to DRN, if we look back over to DRN very quickly so you guys can get a quicker understanding about this. Okay, just like RMZ, on DRN's chart, we noticed that this 180-day SMA line has been acting as a support level. It bounced here once. It shot up here, 50-day SMA line. It broke a little bit below it here, but for the most part, it held, it held right around there, shot back up. 50-day SMA indicator acted as a support level again here. Now we saw a bigger pullback in DRN's price, back down to about $21, and from there we've been seeing some upwards momentum in this stock. And with my strategy, in swing trading, for those of you guys that don't know, is I like to focus on uptrending ETFs and stocks that are uptrending in price, meaning that they're trading above the EMA line, they're trading above the SMA indicators, right? And they're pretty much at a dip buy opportunity. And that is what I like to focus on. Pretty much I look at ETFs and stocks that are uptrending, that are at a dip buy opportunity, right? And that are continuing to show signs of an uptrending pattern. And that is why I'm watching DRN very closely. And my main goal with DRN, is if it does end up opening green tomorrow and start to push back above this EMA line and closer to this 50-day SMA indicator, that will give me a full-fledged confirmation that DRN is starting to push back up. And what we notice on this RSI level, the relative strength index, we see that it hit lows of about $30, or not $30, 30 points here as DRN pulled back all the way to about $20.95. The RSI showed that it was completely oversold. And for those of you guys that don't know how the RSI works, it's this range right here from about 30 to 70. And we see these lines here, right? We see that, as the lines get up closer to the 70 level, that means the ETF or the stock is overbought, meaning a bunch of people are buying into it, right? And it might not be as good of a buying opportunity as it would be if it was on the oversold, oversold side of the of this of these levels, closer to the 30 point level here. As we saw, it was at the 30 point level. As we saw, the stock or this ETF started to sell off, get closer to $20.95. And obviously, as more people are selling, the RSI levels are getting more and more oversold, and that could be a better opportunity to possibly, buy into the stock or the ETF. But you don't use this solely as a buying tool, but as one of the many tools that we use to buy. And from there, guys, since it hit this low point of about 30, we see the RSI level shot up a little bit to 55 as this shot up here. And now we saw that another healthy little pullback in this ETF, and the RSI level shot back down to here right at about the 40 level. So what I'm going to be looking at, like I said, just to recap for you guys, is if DRN pops up above this EMA line, and if it pops closer to the 50-day SMA line, I'm going to be looking to add money into this particular ETF if it does that. But again, if DRN opens up tomorrow, shooting downwards, about $20.90 again, maybe closer to this 180-day SMA line, I'm not really going to be looking too hard to put money into it until it shows the upward push to another higher high like it has been over the past couple of months. So that's the number one ETF that I'm watching for this upcoming week. And now let's talk about DGAS, which is the number 2 ETF that I'm going to be watching for this upcoming week. And for those of you guys that watched my video on Friday, I believe it might have been Friday, I was talking about how I was looking to, take a position in DGAS if natural gas was to get rejected at this 277 price point, that it was consolidating at. And what we do notice here, guys, is that since it was consolidating there on Friday, and obviously the markets closed on Friday, and now, the commodities markets, the futures markets opened here at 6 p.m. where I am in New Jersey, and now we notice that when the markets opened at 6 p.m., we noticed that natural gas opened at 273, which is a nice downward gap down from that 277, point of consolidation that it was at for Thursday and Friday of last week. And like I mentioned in my video, I was talking about if natural gas was to push down from this consolidation point, I was going to shift my focuses over to DGAS for this upcoming week. And that's exactly what ended up happening. Like I said, we're at 273 now, 4 cents lower from that 277 consolidation point. And this just furthers the indication of a downtrending pattern for natural gas. Because if we look, let's say we look at the 20-day chart here, and this shows it perfectly for you guys. Check this out. So we see, as you know, natural gas was downtrending over the past couple of weeks. It was getting rejected by the 50-day SMA indicator, pretty much by the EMA line, with some outliers of it popping above. But for the most part, you know, it's been getting rejected, making lower lows. And we saw the huge push up from 270, this low of 270, up to about 277, right? And we saw this nice consolidation right under the 180 SMA indicator, which is what I was talking about in my previous video. And as we saw that strong consolidation, we saw that now that it opened up at 273, this is a confirmation that this 180-day SMA indicator acted as a resistance for the price of natural gas. So now we see the big pullback here. I'm going to be shifting my focuses over to DGAS, which was at a good dip buy potential opportunity, you know, at around $26.30, because, you know, as natural gas went from 270 to 277, DGAS went from 28.30 down to about 26.30, which opened up, what's that, like 7%? Excuse me, like about 7% potential for profit. And, you know, again, just like DRN, I focus on uptrending ETFs or stocks that are at dip buy opportunities where I still see potential in the ETF or stock to go, you know, up in price. And like I said, guys, now that natural gas is at 273, that consolidation point at 277 has been broken beneath of, right? Now I can shift over to DGAS and focus on this ETF for this week. So now, you know, if natural gas obviously stays at 273, we're going to see DGAS open up at about like 27. I don't know exactly, right? But DGAS, in my personal opinion, will open up in the $27, most likely on Monday, if, you know, natural gas stays around 273, maybe a little bit higher, maybe a little bit lower. And, you know, obviously if that happens, you know, DGAS is going to be showing signs of an upward momentum push above the EMA line, and, you know, it's going to be looking to make higher highs. So let's analyze how much potential for profit DGAS has to offer on this 20-day, 1-hour chart. So let's say we open up at about $27, and all indications are showing that natural gas is going to continue this downtrending pattern that it's on. Let's say we get in $27 up to previous resistance levels at about $28.30. That offers about 4.8% up to 5% potential for profit. And if DGAS continues to make higher highs, who knows? If it hits the 29, that's 7%. If it hits 30, right, that's about 10%. So you see the potential for profit that DGAS has to offer, and that is why it's this number 2 stock that I'm watching for this upcoming week. And the third one that I'm going to be watching and looking to add more into my position is GUSH, ticker symbol GUSH. And for those of you guys that don't know, this is another inverse ETF. Its inverse is DRIP, ticker symbol DRIP. And these two ETFs, they trade based upon XOP, which is an oil and gas based ETF. And whenever XOP is going up in price, right, GUSH is going up in price because it's the bull ETF. And obviously vice versa for DRIP. Whenever XOP is going down in price, DRIP is going up in price because DRIP is the bear ETF. And why my focuses, you know, are on GUSH for this particular week, and I talked about this in Friday's video as well. And if we look over to the 90-day, actually, yeah, let's look at the 90-day 2-hour chart for this particular technical analysis. What we notice in GUSH here is that obviously it's been on an uptrending pattern. Obviously it's on a dip buy, so it fits all of my, you know, components for my strategy of looking at dip buys and uptrending ETFs and stocks. But other than that, you know, it's been consolidating for the past 5 days at around $37 to $38. So I think it's found its bottom in terms of a new support level, and we could validate this a little bit further if we look at the 10-day, 30-minute chart. And I'm sorry I have a bunch of these trend lines drawn out here from my previous analysis. Let me actually just erase all of these for you guys. Boom. So let's draw some new support levels for GUSH. Obviously, we saw a dip below 35 here. That was obviously just a little dip down to $35. Didn't stay there for too long, right? It shot back up in a matter of like 2 hours. But we can just draw a basic little support line. Actually, no, that's bad. That's real bad. Like right around here, right? right at about $37.50 up to $38 is a common support level for GUSH over the past 5 trading days. And since it hasn't broken below there, that gives me a good validation that this could be, a new support level for GUSH. And what we notice here, guys, over the past couple of weeks, GUSH was on an uptrending pattern here, right? Was on an uptrending pattern here, shot up to $47. As CL, which is crude oil, shot up to about $75, right? And as we saw that big pullback in CL, which is crude oil, right? What we notice in GUSH is that this one pulled back to about $37.80, $38, like we were talking about before, at that support level. And from there, guys, it's been slowly pushing back up, and it actually started to trend up a little bit above the EMA line over the past 2 trading days, and then it shot back down to about $38.50, where it's at right now. But where it was at about $39.40 on Thursday, I believe, right? And it's showing signs of upward push. And now that CL, crude oil, and this is what I was talking about in Friday's video, now that crude oil is slowly starting to bounce back, right? It's found its bottom at about $68. It's slowly starting to push back up now. It's not trending below the SMA indicator anymore, but it's now trending above the SMA indicator, above the EMA line, right? And that just indicates to us as traders that crude oil is bouncing, and now it's starting to push up and trying to make a higher high. And we do notice that over the 180 chart here, crude oil, like I've drawn in this trend line, is on an uptrending pattern over time, right? We saw nice healthy corrections, but it stayed above this trend line. A nice healthy correction, stayed above the SMA line, stayed above this trend line. It pulled back here again from 71 down to about 64, but it's still, it's still held above the trend line. It's still held this uptrending pattern that it's on. Obviously, if it started to pull down here, this would be a goner, right? This would be a goner, but it stayed here, started to push back up and made a higher high, and now, it made a higher low, So what is that indicating to us? That's indicating to us that crude oil is uptrending in price. All the indications are here. It's making higher highs, making higher lows, and now that it made this higher low here from the previous low point here, all signs are pointing that crude oil can get to 74, 75, and maybe even past that if it continues on this trend that it's on. And that's only going to help GUSH in the long term, as if crude oil goes up, that means XOP is going to go up, which directly affects GUSH, ticker symbol GUSH, which is the one we're actively trading and looking to put more money into. And out of the 3 positions that I talked about, out of the DRN, DGAS, and GUSH is the only one that I'm actively trading with my smaller account, and with my bigger account, I have a smaller position in my bigger account, in this particular ETF. So, what we're looking at in particular, guys, is, if it does, open up 39.50 tomorrow, and it starts to push back up, back above the EMA line, back above this SMA indicator, that's just going to validate that, GUSH is starting to recover. It's starting to push back up from that support level at 37.50, and it's going to continue on this uptrending pattern that it's on. And let's say, we get into GUSH at $40. Let's say we wait until it pushes back above this 180-day SMA indicator, because we do see that it's trading a little bit below it, right? It's trading a little bit below it now, and let's say we wait till it breaks above that as our indication of adding money into this ETF. It does offer some solid potential for profit from $40, up to previous resistance levels of about $47. That's a 16% potential for profit. So that is a good, obviously that's a great profit margin for this particular ETF. With my average weekly profit goal being about 5%, this obviously triples it. And I'm obviously not looking to make all 16%. Obviously, we can't predict the markets, but with it offering 16%, that is a nice trade to get in and out of in a couple of days if it does end up pushing up, and we could get 5, 6, 7% out of that 16% potential for profit that it does offer. So that is why I'm looking at GUSH. It's really nice, just to recap for you guys, it's nice that it's been consolidating here for the past couple of days at about $38. CL is pushing up, crude oil is pushing up, XOP could open up green tomorrow due to the crude oil pushing up as well. And that's what I'm just going to be closely paying attention to with GUSH, with crude oil, and, with XOP. So those are the three stocks that I'm watching very, very closely for this week and looking to add more money into. And, if I want to talk about one more quick one, I know I talk about Micron a lot on this channel, ticker symbol MU, but this one has taken a nice little pullback over the past couple of days. We saw it hit tops of about $58, and from there down to about $55 where it is right now. It took a 5% hit, and again, I like trading stocks and ETFs that are at dip buy opportunities and that are uptrending over time. And obviously, Micron is uptrending over time. It took this 5% dip, so this could be a dip buy opportunity. Obviously, it could drop more. We can't predict the markets, but keeping an eye on Micron and seeing if it does level off here at about 55 and start to push back up is a very good idea in terms of a swing trader. And we do notice on the RSI levels is that, once Micron was at about $58, the shares were completely overbought. The stock was overbought as the RSI levels were showing it at about 70. And with this pullback, the RSI level is at about 37 now. So it is a better buying opportunity in terms of the relative strength index, but this is not the only indicator that we use in terms of buying and, selling stocks and ETFs. Obviously, this is one of them, but we got to look at many other different things, other than the RSI level. So, that is what I'm doing for this upcoming week. I'm actively trading GUSH. The other two, DGAS and DRN, I'm looking to take positions in if all goes as planned. And with Micron, I'm actively trading this one as well, buying more on the dip. So I don't know exactly what I'm going to be doing this week with Micron. It all really just depends on how it ends up opening up on Monday, and I'll obviously cover that in Monday's video. So I hope you guys enjoyed this video. If you did, feel free to drop a like, leave a comment, and subscribe. If you guys want to follow me on Instagram, my link is down below in my description. @StriveSmart is my username. I post my profits there. I post, trades I'm taking throughout the day, updates to my YouTube channel, random things I'm doing throughout the day, polls, random stories. If you guys want to follow me on that community, I would love to have you guys on there. And feel free to shoot me a DM, ask me any questions you have. I respond very quickly, and I love talking to all you guys that shoot me DMs, and I love, engaging with my audience. So make sure to do your own research before invest in any stocks, any ETFs. Do not buy or sell based off of my opinion or anybody else's opinion out there. You want to become a self-sufficient trader over time, which means you want to buy your own stocks based off your opinion, off of your research, and sell based off of the same exact metrics. Your opinion, your research, what you believe in the stocks. So hopefully you found some value in this video. I really hope you guys did. Let's make some money today, guys. Peace.